Joining me today is Keith Redman, Global Advocate for the American Abroad, and John Richardson of Citizenship Solutions. Now, we just finished a couple of prior videos. We were talking about the Streamlined program updates and the new requirements of the relief procedures for certain former citizens program abroad, and you'll see those links below. So now we're going to be talking about some hypotheticals to sort of figure out what sort of who this programs apply for, if you should use the new program, or maybe the Streamlined, or maybe something else. So I want to start with my first hypothetical. Let's talk about Pierre. He woke up to learn that his bank account in France is going to be frozen. He was identified as a U.S. person, and in fact, Pierre was born in New York City when his parents attended Columbia University, but he's never been back to the U.S. since he's been about 2 years old. His French is perfect, but his English, not so much. Pierre lives a modest life and just wants this IRS FACTA issue to go away. He qualifies for the Streamlined Disclosure program, and if he uses it, he will have no penalties and he won't owe any taxes, and rather he'll get a tax refund of about $4,000 as a tax credit has been increased to $2,000. And in France, he's taxed very heavily, so the foreign tax credit will apply, or if not, the foreign income exclusion. So here it is. I want to ask you, I'll start with you first, Keith, because this might sound familiar to some of the people you talk to. What do you think he should do? What are the things that he should be thinking about when deciding whether he should go with the Streamlined program or the new relief procedures?
Oh, boy, that is a good question. And I am speaking as a layman. I think it just depends on his particular situation that you've outlined. If he is planning on renouncing under the conditions that you gave, it would make better sense that he renounce his citizenship and then enter the new IRS program to just be free and clear of not only U.S. citizenship that he does not want, but also moving forward, he doesn't have to, quote unquote, look over his shoulder in regards to the IRS. Not saying that the IRS would come after him, but at least it's a finite or definite break, if you will, with the United States. The Streamlined program, I would say probably not in that Pierre's particular situation, because Pierre is not looking to maintain his U.S. citizenship moving forward.
That's right. Even though for certain people, and certain people that do wish to renounce, Streamlined might be the way to go, though. And then we'll talk about that in a little bit. Now, one of the other things that, because sort of the thing we were discussing, and we've discussed in previous videos, is sort of the dangers of entering the U.S. tax system. And this is something that you've said many times. Think before you enter the U.S. tax system. And we all recognize the amount of scaremongering that's going on by the IRS and the tax industry as well, insisting that, Pierre, would you agree with me that Pierre could find a tax professional in the U.S. and call who would say, yeah, you better do this or the IRS is going to come and arrest you?
Absolutely. I hear it all the time. I hear a number of people, professionals in the U.S. tax compliance industry, who do say this to not only Americans overseas, but also to accidental Americans. Literally, that they're going to come knocking on the door in France and arrest them, which is
maybe they are, but not for this.
Not
right?
true.
No. They have to be something really different than this.
Exactly.
Now, John, I want to ask you the same question that I just asked Keith. What do you think his decision sort of does determine on whether he intends to stay a U.S. person or not?
Not necessarily.
Okay, why not?
Well, we don't have enough information on his net worth, okay?
Good
And I
point.
would point out also that it sounds to me, if he's born in New York, to a French, whatever you said, it sounds to me like he's a dual citizen from birth.
Yes.
The program that came out in September specifically requires being under the 2 million. Okay, now it may be that he is there bumping up against that, in which case Streamlined would be much better for him. He can just go back to 5 years, and he would claim the dual citizenship exemption from birth. But in this case, I think that that's fundamentally the difference. It's not. I don't think these things are always that clear, but I really think that not being able to get a Social Security number is a huge benefit to the new program.
Yeah, that new program, for people who are worried about entering the U.S. tax system, which I believe is a reasonable fear, the new program, you don't need a social security number. So they're sort of like, oh, okay, how could you really be in the U.S. tax system if you don't have a social security number? So that's one thing. When I saw that, I was like, okay, I think they mean what they're saying here. If they did require one, I'm like, I would say, yeah, I wouldn't use it. I don't trust them at all.
No, they mean it. They mean it.
Yeah,
I mean, this is not, in my view, it's not any attempt to help any accidental Americans. I think it's an attempt to, deal with the political fallout caused by the foreign bank issue, that are uncomfortable with the situation having Americans.
Yeah.
Yeah, I think that's a
John,
really good point. It's more.
John, I think it's important if you may make another statement in regards to being a dual citizen from birth, that they may be exempt. That's not talked about enough. Could you make another statement on what that actually means for, let's say, the accidental American?
Right now, this second?
Yeah, if you don't mind.
Yeah, sure. Yeah, no, I'd be happy to. So, the problem, of course, whether real or imagined, is being a covered expatriate and therefore being subject to the exit tax. Now, anybody with a net worth of over $2 million would be subject to the exit tax if they were nows. Okay. Now, there's a dual citizens from birth exemption, which is a bit of an oversimplification. But if one, you can certify 5 years of tax compliance prior to the year of renunciation. 2, you were a dual citizen, born a dual citizen. 3, at the time of renunciation, you were a tax resident of the country of your second citizenship. Then your net worth, you can escape covered expatriate status even if your net worth is over $2 million.
That's right.
And this is huge. It's huge.
Right, a lot of
and
people.
It's not talked about enough. So thank you.
Right, that's exactly right. And maybe maybe this is something we'll need a separate video on, because so many people.
Actually, Anthony, I would recommend that. Recommend that. Okay,
that would be good.
It's there. It's not well understood.
Right. Because that makes a huge difference and you know what? There's someone even on your forum who his son was on there, Keith. And I remember, and I think we might even talk to him. And now I'm thinking, he is a dual citizen from birth. So I'm just sort of curious. You might want to do that. So that would be
I would be very, very careful with that. Okay, because if I can put it this way, the dual citizenship from birth is a necessary but not a sufficient condition to avoid covered expatriate status.
Okay. Now I want to move on to the next hypothetical. A little bit more complicated. A little bit more things going on here. And let's talk about Kyle. Now, Kyle does speak English very well. He left the U.S. in 1999 when he was 18 and now runs a few successful businesses overseas. He thinks he might have filed returns in high school when he has a job, but he isn't really sure, and he really has no way to check. He might have been on his dad's return, but his dad isn't around anymore, and those files are long gone. His net worth is hard to calculate. He thinks on a good day, maybe everything is worth $10 million, but on other days, he's not sure if anything's worth anything. He's had years where he's made significant income, but he's also had years where he had significant losses. And if we really look at the last few years, kind of all washes out. He has really no intention of returning to the U.S. aside from visiting his family. And he isn't really sure if he would owe any taxes to the IRS if he's filed. He's taxed heavily where he is and believes the foreign tax credits would negate any tax liability. He's married, and his wife sees no point to being a U.S. person, and she wonders why he hasn't renounced yet. So here's this hypothetical. So I'm going to ask you, Keith, do you think there's any possible way he could qualify for the new program, or will he be stuck with this using a Streamlined?
From my layman's knowledge on that one, and I'm going to have to defer to the two of you, I would say that it would be more the Streamlined program than the new program.
Yeah,
especially since he has businesses. That's too complicated, and it doesn't meet the criteria of the new IRS program.
Yeah. So yeah, and I think your layman's reaction is correct. There's a few problems that are here that I think just and the danger, as we mentioned in a previous video, is if you don't qualify and you do it anyway, you're in a worse position than if it's Streamlined, and that's absolutely true. That's very true because you're doing more years and you're open to all the penalties. Whereas in the Streamlined, no penalties. You're just paying tax due, and that's it, if there's a tax due. So, John, what would you say are the things that are going to hold Kyle back from using the new program?
Well, the first thing I would say, it sounds like he's headed for a divorce if he doesn't get rid of the U.S. citizenship.
Yeah, I think so.
But, this guy needs very good counseling. Okay, for sure. I think that the first decision he needs to make is, does he want to renounce for sure? Yes or no? If he doesn't, the Streamline can get him into compliance long run, which may or may not be a good thing. I think one of the mistakes that people make with this is that they think, well, I can get into compliance, but they don't consider, the problem of maintaining the compliance, which can be very expensive. Now, on the covered expatriate issue, what I want to do is I want to talk about the net worth, and I want to talk about the problem with the tax liability. First of all, you make the point that he's got a number of businesses. If these are successful businesses and if they are things that the IRS recognizes as corporations, he may very well have a transition tax issue from 2017, which would make it impossible for him to meet the $25,000 of tax thing. Okay, so that would mean Streamlined. Okay, it's also entirely possible that his view of his situation might be that he's worth over $2 million, which would also make it impossible to use the new program and move him into Streamlined. I would point out on the business valuation, if the shares that need to be valued, the criteria is fair market value, and that's a separate issue or discussion. He may or may not be above the $2 million, but if his retained earnings that the transition tax was based on are already over the $2 million, I think it might be difficult for him to argue the fair market value of his shares is less than $2 million.
That's a good point.
So those are some of the factors. I think probably he's going to be in the Streamline thing. Then the next thing that he needs to consider is how many years is Streamline to file. I think probably he should think in terms of 5 if he can do it, because once the renunciation decision has been made, people need to do this quickly and get out. I think also, by the way, the issue of he doesn't know whether his father put him on his return year, I don't think that's the issue, because the test is that he has to have filed the return.
Okay.
Not that he was
somehow dependent. He didn't file the return. Yeah. He just doesn't know if he actually did or not. And I actually did find my own tax return from 1989 myself the other day, like cleaning out my parents' house. I was like, oh my God. I did file one myself. I had no recollection of doing that, but there it was.
These are the types of things you repress.
So I think that's really the thing. It's so the new program is really for a unique set of situations, and also your Streamlined, when your Streamlined is 3 years of compliance, 6 years of FBARs. When you expatriate, you need to have 5 years of compliance. And so something that we'll do is when a client is on the fence, like, I don't know if I really want to expatriate. It's like, well, guess what? Let's do the Streamlined, because at least it gets us 3 years. And then if you do want to expatriate soon, well, we'll just go and do an additional 2 years back. We'll go 2 additional years back. Or if you want to think about it over the next few years, well, then next year will be year 4. The year after that will be year 5. And so you're able, you're not wasting your money by getting into the Streamlined program. And I'll tell you what is convincing a lot of people who were sort of on the fence is what I discussed in the first video is just the compliance costs that happen year after year. The IRS, the Congress bundled the tax code so bad when it came to international returns in the tax reform. They made everything so horrible. And really, for someone like Kyle who has the businesses, he'll have the Form 5471 obligations all over the place. These forms, that the amount of work has doubled, sometimes even more than that. The IRS has just taken a terrible form that they didn't need, and they only made it worse. So that's really something that has been convincing people as they see, like, wait a second, why was my tax preparation bill so much this year? And when they see, like, oh my God, this is why, okay, well now, you know what? I think I do want to be done with this nonsense because it's a real number that needs to be paid every year. So I think that sort of concludes this series here. Now we are going to have some Form 5471. Yeah, Keith, what do you want to add?
Yeah, I would like to just add one very brief hypothetical to pose to the both of you. It has to do with Pierre, your first hypothetical, the first guy, okay? Let's say he is already renounced, and he renounced 6 years ago. Should he do the new IRS program? Because he renounced, but he wasn't in the U.S. tax system when he renounced. He didn't enter the U.S. tax system when he renounced, and that was 6 years ago. Should he do the new IRS program, provided he meets the criteria now? That's a big question that accidental Americans have.
Yeah, I would say I would probably advise to doing it because, again, the part that sells me on the program is that you don't need that Social Security number. So that tells me, okay, the IRS actually means it. So to me, if having the finality, and it's like, I guess this is also the depends because, the IRS's ability to go in other countries and do what they claim they're going to do is just really limited. That's more of a scare tactic. But there is absolutely a utility in knowing that they can't. Something being very unlikely versus something that won't happen. Well, that very unlikely might keep you up, a couple nights. So maybe the smaller cost to using the program might be worth it to you. So that would be my answer is like, yeah, I would probably be more likely
consider it.
Use I would say, strongly consider it. I would say really strongly consider it just because there is that peace of mind that comes by. And, this is sort of anything. It's like, something you have to understand, really anything is possible with the IRS. Anything. And it's really, the IRS is one of the worst creditors to have because they won't follow their own rules. And their own rules are so powerful and consequential. When they get them wrong, it's not just, it's not necessarily an easy fix. There's just certain things that sometimes don't have much of fixes. And you really could be spending a lot of money on repairing a situation with an attorney as opposed to doing a simple filing up front. So that's really something to think about, that the IRS is kind of out of control. So if you could get that risk out of your life, I would really, really think about that. So, John, what do you think to that? Would you probably be pushing them?
I would never push anybody one way or the other, but I would have a discussion about, what the fallout and the consequences might be. And I think that there are two things that one would look at. All right. The first would be whether there was significant tax liability for the 5 years or, outstanding generally. But more importantly, I would look at what would it mean for this person to be a covered expatriate. And I would look very, very carefully, try to identify whether they have pensions, foreign pensions and that sort of thing, because, these are practically subject to direct confiscation. The taxation on those things is so punitive. So I would sit down and I think I would say, now, first of all, it's interesting that Keith's hypothetical does not specify whether this person actually has a Social Security number or not.
In my mind, it would be that they don't have a Social Security.
Right. If they don't, obviously they have no link, to the IRS. Okay. But I would suggest to you, Keith, that there may be people in this category who do. Okay. I think it's a nuanced, fact-specific inquiry, and I think it should include, what is the potential liability for being a covered expatriate.
Got it. Yeah, I think you're right. All right. Well, with that, I want to thank everybody for joining us and really thanking so much to Keith Redmond and John Richardson again for giving their time and really putting their efforts into this sort of injustice, this terrible injustice that is around the globe thanks to the IRS. Now, we're going to have some Form 5471 updates coming up shortly. Tax reform really bungled that, and people have a lot of questions. And also, Keith and I have been talking about a new video we're going to be doing. He has a wonderfully subversive request into the taxpayer advocate, which they have accepted. And we're going to be discussing that. It really underlies the sort of hypocrisy, the vast hypocrisy of citizenship-based taxation and how the IRS really doesn't mean what they say. This is Anthony Parent of IRS Medic. Thank you for watching.